Hello again, my friends. So about a couple of months back, I made a video on a day trading strategy for Bitcoin, where I also mentioned I invest in two Bitcoin ETFs. The first of which is BITO, the ProShares Bitcoin Strategy ETF, which has been around since about 2021, and the IBIT, the iShares Bitcoin Trust, one of the largest spot Bitcoin ETFs that recently got approved. Before proceeding, let's first discuss the main difference between these two ETFs. BITO uses Bitcoin futures and does not actually invest in Bitcoin, whereas IBIT is backed by actual Bitcoin holdings and therefore tracks its spot price very closely. If you are bullish on Bitcoin and you want to invest over the long term without having to deal with hot and cold wallets and the risk of getting hacked or losing a private key, IBIT is a great option because of its very low 0.25% expense ratio and its very low tracking error with Bitcoin. On the other hand, BITO is a futures ETF, and these ETFs have to be rolled over monthly. For example, BITO's current futures contract expires on September 27, 2024, after which this has to be rolled over to the October contract. This means that ProShares will sell this September contract and use the proceeds to buy the October contract. When the market is in contango, which occurs most of the time, the expiring September contract will be at a lower price than the October contract, resulting in a negative roll yield. This is why, over the long term, BITO will underperform Bitcoin itself, which is very clear when you overlay both markets. This is why I mentioned earlier that IBIT, the spot Bitcoin ETF, is a better choice for long-term investments, especially when BITO's expense ratio is rather high at 0.95%. Fortunately, there is some compensation for this BITO drawback, which is why you are watching this video. BITO is registered under the Investment Company Act of 1940, which states that ETFs that generate a profit in a given year must either distribute all those profits to investors in the form of dividends, or they will face steep taxes. This has led to some pretty impressive dividends over 2024 thus far, with yields reaching over 50%. I currently have a small holding of 713 shares of BITO, and over the course of 2024 I have received about $3,600 in dividends. And despite the negative rollover, I still have an open profit, so this dividend play still makes sense for now. There is a catch, of course. The fund can only generate a profit if the price of Bitcoin is rising. Between October 2023 and March 2024, that was exactly what happened, giving rise to these great dividends. But if Bitcoin crashes for a long time, which it certainly has, you can expect to receive very little or even zero dividends. In addition, ProShares warns that the monthly dividends are calculated by estimating the fund's current year's distribution allocated equally over the remaining months of the year. As such, dividends may change significantly from month to month, depending on the price of Bitcoin. So, if you are bullish on Bitcoin, should you invest in BITO? If you want a long-term investment, I would still recommend the spot ETFs, which have lower expense ratios and do not suffer from negative rollovers. In fact, over the coming months and years, I think I will shift all of my Bitcoin holdings to the spot ETFs instead. If you are bullish on Bitcoin over the long term, but you think a consolidation will persist over the next 6 to 12 months within the say $50,000 to $75,000 range, then you can consider BITO and get some of those dividends. If you are really torn between BITO and the spot ETFs, you can always split your capital between them to get the best of both worlds, at least for the time being. In the long term, ProShares will probably stop offering BITO because of the large fund outflow towards the spot ETFs, so you will probably have to settle on a spot ETF anyway, or purchase Bitcoin directly from an exchange. Of course, don't just invest in Bitcoin, have a diversified investment portfolio consisting of a mix of stocks, bonds, and perhaps real estate as well. Or you can choose to stick to trading, in which case you can check out the day trading strategy I made, or this playlist of forex trading strategies. See you at the next one.